Hey, welcome everybody to the last episode of News of the Money World for 2024. My name is Darcy Ungaro, and this is Rupert Carlyon, and we've been with you the entire time. So thank you for tuning in. How are you, Rupert?
I'm very well. It's a good day. Markets keep on going up. Life's pretty good right now. Another 3 weeks to go, and then I go on holiday. So I just can't wait, and that's all I'm just hanging out for. But I just, before we get started, reiterate exactly what you've said, Darcy. Thank you very much to everyone that's listened. There's been a lot of dribble. It's been come out of both of us for the last kind of 12 months. So thank you. We appreciate the support and really look forward to coming back next year.
Yeah, lap up that dribble. Get it while it's warm. It's awesome. And you're taking a few weeks off. I'm taking probably 4 weeks off. The Reserve Bank of New Zealand, though, after this week, they're taking 3 months off in terms of their policy announcements. So what would you say to, I'm going to guess you're going to say what, 0.5 off of the OCR come tomorrow, which is the 27th of November for the record. What do you think they're going to do?
Look, you guessed right. I think it's going to be 0.5% off. I think probably the more interesting one is their forecast. And so every time they make an OCR announcement, they also give a forecast of what they expect future OCR cuts to be as well. And this is really, really important for all of us, because what that will do is that largely determines where the forward pricing goes. And by that, what I mean is saying, hey, cool, if the Reserve Bank thinks that interest rates are going to fall heaps next year, then the 1, 2, 3 year swaps will fall quite a lot, which is what our mortgages are priced off. And if they go, you know what, we don't think we're going to need to do too much more because we're seeing a little bit of strengthening in the economy, then actually you might even see the opposite and the swap rates come up. So look, my view is 0.5 point for Wednesday. Mm-hmm. And then I think the messaging for next year, it's going to be pretty circumspect. I think there's been a few green shoots that we're starting to see in the economy, though there's a lot of businesses that are really, really struggling. So unfortunately, I think what they'll flag is 50 points Wednesday, 25 points February, and then another 25 points back end of March. But that's probably where they see it ending. Largely what the market's expecting, so don't expect too much to change off the back of it. But it's definitely not the help and the support that a lot of everyday Kiwis would like to push interest rates and mortgage rates a whole lot lower. Probably not the support that Nicola Willis or Chris Luxon are hoping for either, because 12 months on, they're still waiting to see this euphoric positivity that was meant to join their election.
Yeah, I think it's to actually put your hope in a politician of either side is like, yeah, whatever. I think there's better things to hope for than to actually see them make something better, because they're politicians, right? Like, the government doesn't add value in my libertarian opinion. So I think that it'll be an interesting little time, right? So 0.5% to come off, I agree, tomorrow. I think that's a no-brainer. I was speculating for I think there was 2 days, and I might have actually mentioned it on a previous episode. There was 2 days where I felt incredibly optimistic. I was going for 1% off, right? I thought there is a tiny chance that this could actually, that there could be a mammoth cut, one final push just to get through the 3-month holiday. And then, hey, we arrive where we need to be, rather than have to kind of do a bigger cut than expected because the economy was hit harder than expected. But I think also the nuances when you dig beneath the surface around the OCR adjustments in response to inflation is worthy of just mentioning. The fact that there are tradables and non-tradables components. And so there's bits of inflation that can be controlled by the Reserve Bank of New Zealand. And those are the things that are inside of our country, things that we can't necessarily export or import. Those are the non-tradables. And then the tradables, that dances to another tune. The Reserve Bank of New Zealand can't control that. They can really just kill demand to suit accordingly. But there is a rising risk, in my view, maybe not so much in the first half of next year, but in the second half of next year, there's a rising risk, in my view, that we could see some of the factors play out overseas that could cause the tradables to go up. And therefore, we might be forced to keep interest rates at that level. So yeah, maybe 1% comes off, but maybe it stays there. And there's a growing chance that it could actually increase towards the tail end of next year. What would be your views on that cunning theory, Rupert?
I think everything that we're seeing internationally suggests that inflation is likely to pick up a little bit. I'm saying that oil down at almost under $70 a barrel will be a big deflationary environment as well. And so that's kind of with the global demand story that we're seeing, that's going to be hard to change. But I think when we look at Trump tariffs, we look at deficits in the US, deficits all over the world, it's pretty hard to see inflation continuing to fall too much further. That the markets where it has fallen, it's all been about recession. So you think Europe, China, those kind of markets. Whereas US, where they're ticking along extremely nicely at kind of 2.5%, 3% growth, at kind of the domestic inflation is not coming down at all. I do think on the non-tradables, I do think we do have a bogeyman that we might start to see a little bit next year. And I wonder whether the government will lose its nerve on austerity. I think if the government gets to mid next year and we are still kind of limping along like the sick man's dog that our economy currently is, I reckon they might start spending some money as they start to refocus on that election in September 2026. So don't be at all surprised if New Zealand government kind of rejoins the spending kind of watch next year. And it's actually been quite interesting, right? You've started to see a tiny bit of language shift from Chris Luxon over the last couple of weeks, where he's kind of gone, look, we're really focused on getting health sorted. We're focused on moving growth back into the economy. We've already got spending under control. So he's kind of putting that in the past tense. So I think the only way that they can really drive growth through the economy in the short term, which is, let's be honest, politicians are always short term, is going to be if they increase spending. And I also firmly believe that the only way they're going to be able to, a good example of that will be healthcare, which is indicated as one of his priorities. And the only way they're going to be able to fix that is if they start spending in that space. And so, yeah, I'm kind of curious, but I think what we might start to see from next year, particularly budget next year, is that will be the bogeyman that I think will be kind of slightly different to everyone's assumptions. We might actually start to see government spending tick up rather than continue to fall, which is clearly a big detractor on the economy.
Yeah. Okay. Well, that'll be interesting, right? Again, you can't put too much hope in politicians. So if you voted them in on the promise of a 20% flat tax rate at some stage coming out of the ACT Party, well, yeah, this is what you get in reality, right? You basically just get the cold soup of the middle, different flavors at the start to attract you, but it all tastes the same, right? And it doesn't really do much because of I guess that election cycle is too short. There's not enough time for like the hard things have to happen at the front, and then you have to consolidate once you've seen that your decisions are actually bearing fruit. But what happens in our country, and I guess across the world, is that you have the next government blames the previous government for their failings, but really the failings were as a result of cleaning up the previous government's mistakes. And so you just get this
100%.
blame game, and then you try to rebuild either on the economic or on the social side, but you never get enough time under your belt to see the fruits of it. And I don't know what it's going to take to change that, but I'd suggest that we all kind of have to think accordingly when we go to the polls, right? Like, really, we can't be voting for what we want, because when we do that, we're encouraging the short-termism.
I actually 100% agree with you. We should be voting for what our children want. The problem we have, though, is that politicians live on a 6 to 12 month cycle, and that's all they care about, right? Hence why we've never had any infrastructure built in New Zealand, because everyone's gone, I'm not paying for this today with today's money. I'll just kind of wait until everything breaks before I do it. So yeah, it is a tough one, but I'll just put that up there as my big red flag, where I think I can see, from looking forward, I wouldn't be at all surprised if we start to see some of that change, right?
Yeah, I agree. Okay. So flipping over now to the global picture, there's been a few reports that you sent through last night. So I spent last night, I love these. I love our times together, Rupert, because you give me some homework before the day. And so I spent last night reading some reports from UBS, from Goldman Sachs, from JP Morgan. Really interesting. It was so hard to stay focused, though, because so many little nuggets of stuff that you could learn about, like twin deficits and a weakening dollar. What does that do? And there was just so much to get distracted by, but there was a lot of themes in there in terms of economic growth, mainly in the US. Inflation might be stickier. What other things are you kind of picking up in terms of the main entities out there in terms of their predictions? What are you seeing coming up next year?
Oh, look, I was fascinated, right? Because I think the core themes are largely there or thereabouts, right? They're all talking about continued US exceptionalism, right? So they think US comes kind of down for that kind of soft to no landing, continued growth in the US of 2 to 2.5%. at a GDP level in line with the long run average. What that does is that means that US equities keep on going strong. I mean, UBS and Goldman's both have got the 6,600 target on the S&P 500. It's currently trading at about 59.50, so that's a 10% gain on where we are today. And I think they're also forecasting, all kind of talking about very difficult economic environment for outside of the US. So difficulties in Japan, China, and Europe through a multitude of reasons, right? There's a combination of the Trump tariff kind of issues. You've got what's happening in Europe around Russia and war and energy. Plus, you've also got all of their domestic issues where they're unwilling to restructure their economies to drive continued improvement. So I think I've been following these economic outlooks for a long time. And probably this is one of the first ones where I go, they're pretty much all bang on exactly the same, which is concerning because the moment that everyone's kind of in the same boat, that means it's already priced in. But at the same time, it is kind of quite good and quite interesting to see where they're at, right? Probably the one thing I was kind of surprised at, there is a little bit of dissension on the US dollar, where I think one or two of the market analysts are talking about, hey, US dollar's got ahead of its skids and it's probably due for a bit of a weakening. And then others have got the view that it continues to strengthen from here. I think from a New Zealand context, if you go with by my theory, which is the New Zealand economy is on its knees and is likely to stay on its knees for a while, then actually we end up in a world of that doesn't really change too fast or doesn't really change too much, right? Because I think, if anything, my personal prediction would be New Zealand dollar gets weaker over the next couple of months as we don't really emerge from this kind of economic malaise that we currently sit in.
Yeah, it's a fascinating time. Like it definitely is an era where it's a US story and the rest of the world, and New Zealand is effectively on the sidelines watching the story, but we're subject to all these things. We're price takers. We can't necessarily climb out of this hole easily because we have limited means to do so. We can only sell milk at $10 for so long, right? And then there's going to be a pullback in milk solids. There's got to be other levers that we can pull, and technology is one of them. However, there's a lot of entrenched issues that would need to be dealt to so that we become a tech hub. I think that what's happening in the US in terms of them now almost owning the crypto ecosystem or trying to makes that very, very fascinating and almost guarantees that they will be the sovereign nation behind the next financial system if indeed it does go that way. So I think that could be quite fascinating to watch as well, right?
I see it as a massive missed opportunity, right? I mean, New Zealand had the opportunity to lead the world here. And I think now the US is going to pick it up. I mean, I listened to an interview with the Binance CEO last night, and they're talking to 5 different countries about where they go for their global headquarters, trying to combine a combination of regulatory kind of benign's the wrong word. An appropriate regulatory regime is probably the best word. Appropriate tax plus the ability to get skilled workers in the door, right? And I think after what we've seen over the last couple of weeks, we've now got the US on that list. But yeah, it is an interesting one. New Zealand on that front, I think has kind of missed the boat, which is a real shame because our regulatory regime is respected overseas, and a crypto industry here would have kind of gone down pretty well. But it comes back to that age-old question, right? We just keep on exporting commodities and raw commodities offshore. We've got to figure out how we get highly productive, more interesting domestic stuff happening. And then we've got to figure out how we actually add value to our exports. Because I think we're probably not recognizing just how much at risk we are, given the majority of our exports go to China, and China's economy continues to go from bad to worse. The Japanification of China, which we've talked about quite a bit, I mean, that's now becoming mainstream conversation, right? Where we had a big population decline last year, and it's looking harder and harder to see a way for China to get out of their current predicament.
What do you think of this idea, Rupert, just to solve all of New Zealand's problem in one go? So this is me just making my pitch to be politician in, 20 years' time, right? 20% flat tax. So I'm just going to steal the ACT Party's tax policy. 20% tax across the board. So increase GST to 20%. Flat tax across the board. No one pays more than 20%. 20% capital gains on everything except for your main family home, just to get that out of the way. I'm giving something away there. And then privatize the heck out of everything, because I love privatization, because hey, why not? Make everything tax deductible, like medical insurance, school fees, everything like that you spend money on that the government is doing a crap job of, make it tax deductible so that you're introducing competition into the system, and just create deregulated sandboxes for people of rational sound mind can go and do business with each other. Do you think that we would ever see some sort of capitalist utopia like that in New Zealand?
No, short answer. Well, I
Dreaming of it.
think I think you I think you potentially could. I think probably I'll add one more thing to your piece, which is could we say, okay, 20% flat tax across the board, 20% GST, but 20% flat tax only kicks in at an income of 55 grand or $50,000. Underneath that, no taxes paid.
Ooh, I like that.
And we're going to measure tax at the household level versus at the
Oh, yeah.
individual level.
Awesome. Yeah.
And I think that there are some things that we could do to be really, really brave. I think we bring in capital gains tax. I think at a 20% flat tax rate, capital gains, it should be income. You exclude the family home. But I actually agree with that. Doing quite a lot of reading lately on Ireland and Singapore. And look, I get New Zealand is a long, long way away from the world. And listening to the Binance guy last night, the issue they would have by moving a corporate headquarters here is could they get enough people and is it just too far away from everything? So I am nervous about that, but I'm probably changing my view slightly that maybe a lower corporate tax rate is something that we should give a go here in New Zealand, but we should only go into it with very clear objectives of what we want it to achieve, give it 5 years to achieve that, and if we don't hit those targets, then we reverse it out.
There we go. Yeah. I think at some stage there has to be more extreme measures, and I use that word very carefully, extreme, because it just means extreme relative to where we are right now. So at some stage, some big moves need to be made. Otherwise, if we keep on doing different versions of the same thing that we've always done, we're always going to get different versions of the same thing that we've always got. This just feels like 1990s to me, early 1990s. And I think New Zealand over the next 2 years, the very distinct chance we're going to slip into stagflation unless we do something significant. And I don't see our politicians having the backbone right now to actually implement it.
I 100% agree. And I think we should be doing things very, very differently, right? I mean, I think what you talked about on healthcare, on education, I'm a big believer in that, right? So we should be saying to all parents, look, if you've got a school-age child, we're going to give you a voucher for whatever the current cost is for school children, whether that's $3,000 per child or $4,000 per child. We don't care whether you use that at a private school or whether you use that at a public school. But again, we're starting to get incentives. We're starting to get competition. Healthcare, exactly the same needs to happen, right? We need to enable and facilitate private healthcare providers to create competition in the system so that we can do that. The flip side, though, is as we capitalize, and you'll hate this part of my kind of concepts, but as we move to a more competition and capitalist-based system, our regulatory approach needs to step up a millionfold. And by that, what I mean is saying, cool, if we're going to make it so that they kind of do that for schools, then we need to be absolutely rigorous around kind of outcomes at schools and being very clear around what they need to achieve and how they're going to, and then making sure that we're very clear that if they don't achieve that, there are penalties in place. That's going to happen with the education system. That needs to happen with healthcare system. It's not just as simple as saying, cool, off you go, here's a voucher. It's a little bit like in the workplace, right? The moment that you just give someone a bonus, it always turns to shit. The problem is because their incentives become messed up. What you've got to do is you've got to give them a bonus and an incentive package, but you've got to also increase your monitoring and make sure you manage them properly to get the best outcomes. It's the combination of those two things that works rather than just handing over the money. And I think that would be my one caveat is going, if we are going to go down that kind of a route, what are the management structures we put in place to make sure that we still achieve some great outcomes?
Yeah, that's right. And it always is just like any form of idealism will get slapped in the face with a healthy dose of pragmatism before it's implemented. And I guess the more gung-ho you are, like I'm thinking a little bit about this dream team that seems to be around Trump, right? Like right now in the US, Donald Trump, he's got Elon Musk, Vivek Ramaswamy, he's got RFK Jr., he's bringing on board these key people, Scott Bessent heading up the Treasury, I think it is at the moment. Is that right? Yeah. And then there's potentially going to be a crypto czar who goes by the name of Crypto Dad. So, of course, I love that. So there's this dream team effect going on in the US, which causes me to think they are really going to make some significant changes, or there's going to be a lot of hilarious comedy that will ensue in terms of just tripping over each other. Already we're seeing signs like Elon Musk kind of saying things he probably shouldn't, which is kind of putting him above Trump. And the type A personality of Donald Trump, he's going to smash that down at some stage. So there's going to be some sort of mess coming
That
up.
won't last, right? You look at the Bannon Trump relationship in the first term, right? I think that lasted like 6, 9 months. I mean,
Right.
it's fascinating to watch how that one goes, right? And as a Tesla investor through our clean energy fund, it does make me a little bit scared because when he turns on someone, fuck, he turns.
Yeah. Yeah. And I think that's something just to be mindful of, like in markets in general, with where we're at right now. It's really easy to get stuck in bull market mode or bear market mode. It's really hard to see balance because these emotions of greed and fear are just so powerful in us, right? And I think that, like in the crypto space in particular, right? So the Bitcoin at all-time highs right now, just edging closer and closer to that 100K mark. And then people, including myself, occasionally I'm just thinking, well, this is going to go way, way higher. But at the same time, in the back of my mind, I know how closely the price of Bitcoin and M2 money supply are correlated. And when one goes down, which it has recently, the other one will shortly follow. And so there's other factors at play that could also bring sharp corrections in the price of Bitcoin, or they could bring errors in other areas where things fall down. One misplaced tweet by Elon Musk could send shockwaves throughout the entire crypto industry. Maybe a mistake or firing a certain person within the SEC or scaring them out might send markets into a tailspin, and the S&P 500 has a 20% drawdown. Who knows? Like there could be a lot of uncertainty next year. Volatility, though, it seems like the uncertainty is definitely picking up pace. Would you agree that the faster
Oh,
we go, the bigger the mess, right?
well, not necessarily, right? So there was an interesting piece I was reading the other day on this because that was the expectation in 2017 after Trump's first election win, where the assumption was volatile. We had we had news every single day of more chaos and things being broken and whatever. VIX went to kind of all-time lows in 2017, and so to a certain extent, and I think I've spoken, and I don't know, right? Let's be honest, you look at this comment with a healthy degree of skepticism. I am a fund manager who's incentivized with the market going up and being stable and steady. But I do believe we now have a policy framework which is actually incentivized to keep markets going up on a straight line, right? We've got
Yeah.
politicians who hate a market crash, and we've got a president in the US who's been pretty vocal about the fact that he sees one of the core marks of his presidency being where the S&P 500 gets to, right? We've got central banks around the world who, over the last 15, 20 years, have decided to start using all of their tools possible to avoid any pain. And so I guess, does this unwind one day? Maybe. I don't really know the answer to that. But I think, and you are probably right, when it does unwind, potentially it unwinds with a humongous bang. The big question, I guess, in my mind is when and how does this happen? Or if it happens, and does it happen if it kind of goes, has this party got a long way to run, right? You look at the US, where they're all a bit nervous about the debt levels. I mean, based on current projections, US debt to GDP or government debt to GDP over the next kind of 5, 7 years under a Trump presidency is only expected to get to 130% of GDP. Japan's been running at over 200% for a very long time, right? So I guess what I'm flagging is I think the party can actually go for a lot longer and maybe even indefinitely. I don't think it's clear cut that we end up in a world where kind of things come crashing to an end. The final point on my positivity would be that I think we've also got to remember the stock market is not the economy, right? We've spent a little bit of time talking about the K-shaped recovery post-COVID. We've got the wealthy, who've got uber wealthy, and the poor, who've kind of struggled, and it hasn't been a great kind of recovery from them. Stock market's no different, right? Where we've had the big, massive tech companies that have done extremely well and have gone absolutely gangbusters. That's kind of 35% of the US stock market. So let's call that, let's call that 20% of global stock markets. But the rest of the markets have kind of been bubbling along and not a huge amount. We've got 20% of global stock markets, 35% of the US stock market, which only makes up kind of 3 to 5% of the economy, right? So we've also got to be mindful that markets and economics are different. And so the markets might keep going, even if we end up in a very slow kind of world of economics.
Yeah, it's the Pareto principle at play though all the time, isn't it? Like over time, it's the 20% that produce 80% of the results, and the 80% only contribute 20% of the results, and or some version of that. Employment, personal finance. You take 100 different people who are investing, same thing. Handful of companies, handful of people, bigger separation between the haves and the have-nots over time. And that is just something that seems to be hard baked into the system that you cannot flush out with politics.
Yep.
And I think that it sucks in that it would be great if everybody could go along with the ride, but it seems to be impossible so far. Anyway, we haven't kind of figured that out as a species, how to make things equal, right? How to distribute opportunity and resource equally. That's what all the Marxists want, right? But I think you kind of have to come to some sort of peace with the fact that it's not fair. But what do you do, right?
Life's not fair, right? It's the truth. It's what we tell our kids from day one. We all know that, but it's about going. Yeah, I think we still do have to figure out a way to make it a little bit fairer, though.
Yeah,
and I do think, I hate to say it, I think interest rates, which is the main tool that we use to level out our economy, what's been proven over the last 5 years is they benefit. So falling interest rates are far more beneficial to those at the upper end of the curve because they own assets. And then on the flip side, when we raise interest rates, it's again far costlier for those at the bottom of the curve because they can't afford the new extra mortgage payments, whereas the wealthy don't have mortgages.
Exactly. It shakes wealth from the masses, and it causes everything to go up.
Yep.
So the more volatile interest rate changes are, the more it extracts and scrapes away wealth through the financial system into fewer and fewer hands. Talk all day about this, Rupert, because it just makes my blood boil. Okay, let's finish up though on Bitcoin, because we've had one amazing year from the low 30s now to the high 90s in 1 year. That is phenomenal and makes me so thankful that I personally allocated a little bit to Bitcoin early on, and it makes me thankful knowing that all the people that I've recommended to do the same have done really well. Always we have to put disclaimers in here that what happens in the past, especially the immediate past, is no indication of what will happen in the future, especially with an asset which was only around since 2009. We still have to be really cautious with how we approach this, but it has been really nice and encouraging to observe something like this happen in a world where there's been a lot of negativity and uncertainty and bad news, to see this thing that has been ridiculed for so long rising from the ashes and actually hitting all-time highs. It's just amazing. What do you think? 100 grand by the year end, and what do you see next year? I'm putting those words into your mouth.
I suspect we will go through 100 grand by the year end. I think it will take the formal announcement of the crypto czar from Donald Trump that'll push it up to 100. And then I think we'll start to see some of the policy announcements come through, right? There's also been the retirement or resignation, sorry, is a better word, for Gary Gensler, head of SEC.
Yeah.
So I think the setup is there. It's now waiting for the next set of concrete steps and concrete actions to make it happen. And Donald Trump doesn't seem to be walking away from his promises to the crypto industry. I mean, $200 million of campaign financing will probably do that for you, though. But at the same time, I think once we start to see a whole lot of these policy announcements go through and we start to see what it actually means in practice, it's going to be interesting, right? Wyoming, a couple of weeks ago, put through a law change to allow its state pension fund to invest in crypto off the back of some of the political pressure. You've got a lot of this kind of little stuff that's coming across. It's going to become, as we kind of go through, in my view, over the next kind of 12, 24, kind of 48 months, we're going to start, a lot of these little barriers are going to start to come down, right? And as we've talked about a huge amount, crypto fundamentally is a game of supply and demand. And as the investment barriers come down, supply doesn't shift, demand goes up, and that should push the price up further and further.
Yeah. And I know this is a bit of a random sort of, I won't say left or right field, but it's an out of field sort of comment to make around this point. But when you have any investments, whether it's NVIDIA or Bitcoin or something else, when they keep on going up and it creates enthusiasm in markets, it sucks capital into itself. And if we have a situation where there's a lot of money printing, currency creation occurring, then it kind of creates little sponges to soak up that. And if that wasn't occurring, you would have a lot more money flowing around the economy chasing a finite supply of goods and services. So if you want to have inflation in a couple of weird crypto assets like Cat with Hat and Dogecoin, then you can laugh at it, but it's actually performing a function, which is to soak it up so that the price of your cheese doesn't get unaffordable next week. You know what I mean? Sorry, just a little bit of a tangent there, Rupert. I had to throw that in there.
Yeah, I can't. I'm not even going to pretend I completely followed that one, but
That's
we'll
okay.
talk about that one later.
Yeah, we'll talk about that one. It's Tuesday, Rupert, and I feel like cheese, so I got to share my feelings, man. Awesome. Well, I think yeah, like next year it'll be really interesting to watch Bitcoin though, and I think that the faster it goes up though, there always is this similar pattern with previous bull runs. It goes up parabolic, but then it retraces, it comes back. It might be 20, 30%. So I think that anybody who is getting involved in that, just remember crypto is volatile. You don't need to freak out when you see it happen. It is the nature of the beast with anything that is new. It's going to attract a lot of uncertainty at the start. So, but yeah, I've got big plans for next year in terms of watching that asset go to the moon. So hopefully that actually follows through and actually happens. And you guys keep on winning awards for one of the best funds out there who've, incorporated Bitcoin. So well
Oh,
done.
look, we're winning the awards now, but I think it's really important that what you've said is right. We will be the worst performing KiwiSaver at some point with that crypto fund, right? The big question on my mind is the traditional 3 years on, 1 year of kind of shit. Does that keep on going, or does the ETFs
Exactly.
change that? But I think we are very mindful that there will be a downturn. It's not an if, it's just a when. And when
That's
that
right.
happens, we should expect at least a 50% drawdown in that fund as well.
Yeah, definitely. Well said. Okay, we've covered a lot this year. Thank you very much, Rupert, for having these conversations with me. I know for me personally, it's been really great just educationally having somebody sending me some stuff to actually do some research helps me broaden my knowledge. So I appreciate that. And it's always good having a chat with you. So thank you for that this year.
Thank you, Darcy. It's been great. I really enjoy these conversations. It's a great way to bring it all live, and hopefully we're adding value to anyone that listens, if there is anyone that listens. If not, it's just us having a random chat. So
Yeah.
thank you, Darcy, and
Network.
thank you everyone that's been listening. And have a great kind of end of year, and hope you all get a good break.
Awesome. All right. Have a good one, Rupert.
Thank you.
There we go, man.